Grade 9, Question 8 memo. So let's have a look. Now we're going to be doing the accounting equation. So just so that you know, it's very, very important that you know the correct accounts, how to classify them, and that you can classify them into these various things here. I have put it at the bottom of the memo for you, but I'm going to refer to the ones that I've drawn up on the question paper quite a lot, but it's exactly the same thing. Right, so you know that there are certain steps that you need to take when you are doing the accounting equation. When you read the transaction, you need to identify the accounts involved in that transaction. And then you need to make sure that you've got a debit and a credit. And then you need to apply assets equals owner's equity plus liability. So let's look at the first one. It says the owner increased his capital by depositing 50,000 Rand directly into the business's bank account. So firstly, we need to identify two accounts. So he's increased his capital, account number 1, by depositing it directly into the bank account, account number 2. So now let's look at bank, because bank is nice and easy. What is happening to bank? Bank is an asset and money is coming into bank. That means that my bank account is increasing and assets increase on the debit side. So we are going to debit bank. Okay, bank is increasing, so it's a plus under an asset. Capital is an owner's equity, and it increases your owner's equity. Owner's equity increases on the credit side, so we are going to credit capital. Capital increases owner's equity. So now we have a debit and a credit, and we can check 0 plus 50,000 equals 50,000. Now this would normally go into your CRJ, because it's money coming in. Remember, you are always the business. So if money is coming in, it's going in the CRJ because we're receiving cash, and the source document will be a bank statement. Then we bought 2 printers from Happy Supplies for 3,000 Rand each and paid by check. So firstly, identify 2 accounts. 2 printers would classify as equipment, and we paid by check, so that means we paid out of our bank account. Now both bank and equipment are assets. What is happening to bank? We are paying for the equipment. So therefore, my bank account is decreasing. And bank will decrease on the credit side. So I'm going to credit bank. And it will be a minus 6,000. Remember, he bought 2 printers at 3,000 Rand each. So that's a total of 6,000. And equipment was purchased. Now, equipment is also an asset, and we've bought more, and assets increase on the debit side. So we are going to debit equipment. So that is also an asset, and it's a plus. So 0 plus 0 equals 0. And then we've paid by check, which means money's gone out of the bank account, so it'll affect my CPJ. And the source document, we wrote out a check. We gave the check away, and we left with the check counter foil. 3. Issued a cash check for petty cash. Issuing a cash check, that means we're taking money out of the bank. So bank's involved and petty cash. Once again, they are both assets. Okay. Now what is happening to bank? We are taking money out of bank to increase petty cash. So my bank account is decreasing. Bank is an asset. Assets decrease on the credit side. So I'm going to credit bank, and it's a minus because it's decreasing. Then we have petty cash. We've taken money out of the bank to increase the petty cash. So petty cash is getting bigger. It's increasing, right? And assets increase on the debit side. So we are going to debit petty cash, and it is a plus. So again, 0 plus 0 equals 0. We have a debit and a credit. We took money out of bank, so it went through the CPJ, and the source document is a check counter foil. The 4th, received. We, the business, have received an invoice for merchandise of 4,900 Rand, which we bought on credit. So that is us as the business buying on credit. That means we have bought on credit. What is merchandise? Merchandise is trading stock. So we've bought trading stock. Trading stock is an asset, and it's increasing because we're buying more. So we are going to debit trading stock, and we're buying more. So it's a plus under your assets. Now we are buying on credit. So we are buying from a creditor. And creditors are liabilities. We are buying on credit, which means we owe the creditor more money. Creditors are liabilities and they increase on the credit side. So we are going to credit creditors control. Creditors control is a liability, so we've got to go to the liability and we owe them more. So 4,900 plus 0 equals 4,900. We have a debit and a credit. When we buy on credit, we put it in the creditor's journal, and the source document is an original invoice because we are the customer. We received the original invoice. So your source document is an original invoice. 5. Received Jin's check in part payment of his account, and we've issued a receipt. When we've issued a receipt, that means we've received money as a business. That means when we're getting paid on account, that's a debtor paying us back. Okay, we are receiving money from a debtor. So what is happening to bank? My bank account is increasing because I'm receiving money. So therefore, I am going to debit bank. Okay, I am going to debit bank. I'm receiving money, and it's going to be a plus. What is happening to my debtor? My debtor is paying me back. Therefore, my debtor, who's also an asset, is decreasing. My debtor owes me less. Assets decrease on the credit side, so I'm going to credit debtors control. Debtors control is an asset, so I'm going to say minus 0 plus 0 equals 0. And I have a debit and a credit. Now I've received money, which means it'll go in my CRJ. And I issued a receipt. The original receipt will go to the debtor, and me, the business, we will keep the duplicate receipt. On the 6th, cash sales of goods, cash register roll. Now, when you see the word sale, a light bulb needs to go off in your head, and you immediately need to say, well, that is 4 accounts affected. Okay, now we've made a sale of 2,125 Rand. So think about it. If I came and bought from you, I'm going to physically give you 2,125 Rand. So that means money's going to come in and it's going to go in your bank account. Your bank account is going to increase because you've received money. You've received 2,125. Bank is an asset, right? Why have we received money in the bank account? Because we've made a sale. Sales is an owner's equity income, and incomes increase your owner's equity on the credit side. So we are going to credit sale, and incomes increase your owner's equity. The reason I got in this money was because of the sale. Now, think about it. When you made the sale to me, have you made this pure profit? No, there was an expense to the sale. That is called cost of sales, and your cost of sales is 1880. Cost of sales is an owner's equity expense. And expenses decrease your owner's equity on the debit side, so you are going to debit cost of sales. Okay, and you are going to decrease your owner's equity because it's going to have a negative effect on your profit. Secondly, I have walked away with some stock. Your stock in your shop is going to have decreased. Trading stock is an asset and it's decreasing. I'm taking it out of your shop, right? So it's decreasing. Assets decrease on the credit side. So you are going to credit trading stock with the cost of sales figure. All right. Remember, if we are selling masks, all right, and I go and I buy a mask. So we sell masks and we buy a mask for 50 Rand a mask. We're not going to sell it at 50 Rand. Okay, I've bought trading stock of 50 Rand a mask. I'm not going to sell it for 50 Rand. I am going to mark it up. I'm going to maybe sell it for 75 Rand. Okay, so now think about it. If I come in and buy a mask from you, I'm going to give you 75 Rand. So your bank is going to increase by 75 Rand because that's how much I'm paying you. Why? Because you've sold me a mask for 75 Rand. Okay, but essentially, have you made 75 Rand profit? No. It cost you 50 Rand to buy this mask. There was a cost. There was a 50 Rand cost to this. And what's happened? I've walked out with a mask. So you are now less a mask. Okay, so there is your 4 accounts that are involved when you make a sale. Your sales and your bank are with the selling price. Cost of sales and trading stock are with the cost price. All right, then. Issued a debit note to Smiley for faulty goods purchased. A debit note. All right, a debit note means that we have returned something to the creditor. What did we return? I've lost my spot here. We've returned faulty goods. Goods are trading stock. So we're dealing with trading stock and creditors control. We owe the creditors less money. So here we have it. Your creditor, firstly, is a liability. We are returning goods to the creditor, which means we owe them less. So we are going to debit creditors control. All right, and we owe the creditor less, so it's a minus under your liability. What are we returning? We're returning trading stock. We originally bought the stock. We're returning the stock, so the stock is decreasing. So I need to credit trading stock. Okay? Trading stock is an asset, so it needs to go in my asset column as a minus. So minus 490 plus 0 equals negative 490. I would put this in my CAJ, and it would be a duplicate debit note. I would send the original debit note to the creditor, and I would keep the duplicate debit note. Okay. Then, drew a check, 2,000 Rand, to Thai Pty Ltd in part payments of our account. So now we are paying a creditor. We are paying 2,000 Rand on our account. All right. So that means we are involving bank because we're paying. So my bank account is decreasing. Okay. Here we go. My bank account is decreasing. And I owe the creditors less money because I'm paying them back. Because I owe them less money, I'm going to debit creditors control. Okay, creditors control is a liability, so it will go minus under my liability. So negative 2,000 plus 0 equals negative 2,000. Now with this, I made a payment. So that's going to go through my cash payments journal, and it's going to be a check counter foil. Then we have here, issued an invoice for the following credit sale. So now we've made a sale, but we made it a credit sale. So we've sold something to somebody and they owe us still for that sale. Right, as soon as we make a credit sale, a debtor is involved. But again, we've seen the word sales. As soon as we see the word sales, a light bulb needs to go off in your head, and you need to know that 4 accounts are affected. In this case, we've not received money. The debtor owes us money for the sale. Okay, so the debtor owes us 1,200 Rand. Why does he owe us 1,200 Rand? Because we made a sale of 1,200 Rand. Did we make 1,200 Rand profit? No, there was a cost to that sale. And the debtor, although he has not paid us, has walked out with this stock. So there's still 4 accounts involved, all right? So let us have a look here. Firstly, we have the debtor, who's an asset. He owes us more money. So we are going to debit debtors control. Okay, and he's an asset, so it's plus. Why does the debtor owe us 1,200 Rand? Because we made a sale to him of 1,200 Rand. And remember, sales is an owner's equity income. So we are going to credit sales, and it's going to be a plus under my owner's equity. Now, there was a cost to the sale, and that is cost of sales. Cost of sales is an owner's equity expense, and expenses decrease your owner's equity, so you're going to debit cost of sales, and it will be a minus under your owner's equity. The debtor has walked out with trading stock. Trading stock is an asset, and it's decreasing because he's walking out with the asset, which means we are going to credit trading stock, and it will be a minus. Now, in both cases, 0 plus 1,200 equals 1,200. 0 plus negative 850 equals negative 850. Here we made a credit sale, so that goes through your DEJ, and we're dealing with a duplicate invoice. We would have given the original invoice to the debtor. We would keep the duplicate. Okay. Then at number 10, we issued a check to Marshall for inventory purchased. Again, we've issued a check and we've bought trading stock, so both of them are assets. We paid for it, so bank was involved, and we bought more stock, so trading stock was involved. Right, so my trading stock is increased because I bought more, and it's an asset, so it will be plus under my assets. I paid for it from my bank account, so my bank account will decrease, and it will be minus under my assets. All right, 0 plus 0 equals 0. Right, I paid for it cash, so it goes through my CPJ, and it is a check counter foil. 11. Received an invoice from Jason for stationery purchased of 2,400 less 5% trade discount. So firstly, okay, we need to work out, we're not going to owe them 2,400, we're going to owe them 2,400 minus the 5% trade discount. So you've got to work that out. Okay, so you can go 2.5% times 5 over 100, and you will get the amount. and then you minus it from this figure. All right, what are we dealing with? We've received an invoice, which means that we've received it from a creditor, and we bought stationery, so we owe a creditor who's a liability. So creditors control, we owe the creditor more, therefore we are going to credit creditors control, and it's going to be a plus under your liabilities. We owe them more money. Why do we owe them more money? Because we purchased stationery. Now, stationery is an owner's equity expense. And expenses decrease your owner's equity, and owner's equity decreases on the debit side. So you are going to debit stationery. And stationery is an owner's equity expense, so it's going to go in your owner's equity column. So there's nothing in the asset column. So now it is 2,280 minus 2,280 equals 0. All right, this is still going through your CJ because we owe the creditors money, and we would receive the original invoice from the creditor because in this case we are the customer. Okay, lastly, H. Cole pointed out that discount of 10% promised on the invoice was not there. We issued a credit note for a discount of 100 Rand. So here, this is, we'd made a sale and we forgot to give the person discount. So now we need to put it through the debtor's allowances journal. All right, so essentially the debtor owes me this 100 Rand less. He's an asset, he owes me 100 Rand less, and I've got to put through my debtor's allowances, and debtor's allowances is an owner's equity expense. All right, so my debtors owe me 100 Rand less, and it's an asset, so minus, and debtors allowances is an expense to the sale. I'm decreasing the amount of my sale. So here I'm going to debit the expense debtors allowances, and debtors allowances is an owner's equity expense, and they decrease your owner's equity. So 0 plus negative 100 equals negative 100. It would go through your debtors allowances journal, and it would be a duplicate credit note.